All right, we are recording now. If anyone wants to ask a question, you can. I got the mics on, so it's not a big deal. All right, let's see. For those of you who are new, also, the left-hand side of the screen, just so you can know what I'm pointing to as I'm talking, because I might move kind of fast. This top line here is bonds. All right, it's the bond futures. This right here is your Dow futures, your NASDAQ futures, your S&P 500 futures, and your Nikkei futures right here. This right here is crude oil. All right, this is the dollar index, the cash index. Below here, this is gold futures. This is silver futures. This is natural gas futures. And then here is your GDXJ and your GDX. OIH, which is your oil. This ticker follows your crude oil futures up here. This right here is the QQQ, which is the NASDAQ 100. This right here is at the bottom three, one of our favorites, Hack, Dry Ships, and Knick Knack Paddywhack. We call it that, but it's called NAC. All right, so as I'm pointing and talking, you'll see you understand what I'm talking about. This right here, these three are your currency futures. This is the euro, the pound, and the Aussie. So I want you to be able to see what you're looking at on this screen. So this is showing you the price change action. This right here is a chart. I got the gold up because we want to see how this moves. For those of you that remember watching last night's video and the video before that, I did speak on the price levels and what we're watching as far as support and resistance. I'm going to go ahead and open up the daily chart right now so you can see it. All right, as you can see, we're trading below the blue momentum line, right? So you can see the weakness with your own eyes. It's right here. And if you look down at the intraday chart, on the 1 hour chart, we've already raced back. So here was the low. This was a spike. You guys remember from the Learning Academy where we talk about these pointers, right? Now, this is on an intraday basis. So the pointers don't necessarily have the same meaning on an intraday chart as they do on the daily and weekly charts. On the daily and weekly charts, it could spell disaster. On an intraday chart, it doesn't necessarily hold the same weight. You can still see that key reversal setup, but not necessarily. You guys remember, you've seen this before. This is for those of you who are not familiar with this. All right, so, excuse me. You can see we're still moving up. We're at 12.50.50 right now, okay? So we came off of today's low here of 12.45.60, and already we're exactly $5 right here, $5 off of this morning's low. Everybody see that? All right. Now, Fed decision is imminent. It's not here yet. And already you can see markets moving ahead of this. Look at the Dow, only down 2 points. It is common knowledge for those that are not, new to Wall Street and how it works. You can pay a premium to get the government numbers ahead of everyone else. Okay? So it's not uncommon to see price fluctuation on this side of the screen rapidly moments before a release of the numbers. All right, so you see this? No changed. They left it unchanged. All right, as you can see, that this disappeared. We were off 2 points. Now it's unchanged. The gold now is starting to react a little bit. We're down a buck and change from where we were. NASDAQ is holding steady down 23 points. Not too much of a change there. So as they begin to talk and things like that, that's when you start seeing the knee-jerk reactions. And that's what we're waiting to see. Depending on what happens here, those of you in the trading room, we're gonna take action depending on what happens here. We'll do some live trading, like straight up. I'm just watching it to see. Normally, you like to give it like 15 minutes, see what the delayed reaction is gonna look like. Normally, you get an idea based on this current bar here. You see how it came up to the trend line momentum, and now you see how it's trying to best it. It could still fail here. We just need to see what happens. Is it going to keep reverse, or is it going to keep shooting up? It's not necessarily the announcement of what they're doing with the rates that causes the markets to move. It's their wording about it. See, here we go. Knee-jerk reaction. Spiking up now. Notice how it moved down a little bit and then just shot up like a slingshot. See this? This is what we're doing. Now, I did mention yesterday in last night's video that the market will tend to obey this 1250 trend line support. Now, some of you may look at this particular bar and you see how the wick came below it. We call this intraday spikes. Okay, as long as the bar does not close below the support, that's considered a bullish move. All right. So that's what we need to see today. We need to see a close today above this trend line support. In this case, it's going to be 1251.10. We need to see that. A failure to close above 1251.10 in gold will open up a run to the top of this Kumo cloud down here, back down to the lower ends of 1200. Now, the good news is you got this ramp coming up here, and this is a daily chart. So that should help give an airlift to the market and keep it at least around the 1250 to 1265 level. We'll probably trade within that range for a couple of weeks. Now, this is a daily chart, but this is kind of where we are right now. It's still a do or die because you lost all your bullish momentum. All right? So that's what that is. Now, I don't know if you guys have on your CNBC where you are or not, but they're talking about how come the bonds aren't really being affected. Here, we're only off 4:30 seconds now, 3:30 seconds. It's maintaining, like I said, around that 153 to 154 level. 152.27 is only a few ticks off of 153 because bonds trade in 30 seconds. So we're 29, 30 seconds. So only a few ticks away from, being back to 153. So the bonds don't care. Now I'm going to pull up the chart here for the bonds to give you an idea of what we can expect based on this decision to leave rates unchanged. Also, while I'm pulling this up, how many of you are surprised that they decided to keep the rates unchanged? You shouldn't be. If you've been following my videos, you've been hearing me say that the bond prices do not suggest a change in those rates. And that's what we have here. When bond prices are bullish, that means yields are down. In order for them to raise rates, you would need for these bond prices to come off, thus lifting rates. And then that helps them to raise the rates because the rates are already going up gradually by themselves as prices come off. All right, so looking at this here and looking at this weekly chart down here, right now you don't really see anything bearish suggesting a continuation of falling bond prices, which means in the near-term future, there is no way in the world they can raise rates. You can't raise yields if bond prices are going up. It's impossible. Okay, so this is how you know if we're getting close to them raising the rates again. We knew that they were going to do it back here because the prices were coming off, were steadily falling, rates was already going up anyway. So for them to do anything with interest rates, they had this to bail them out, the falling bond price. With a rising bond price, you can't do that. So this is where we are. Not out of the woods. They can still do it later on this year, especially if we start to come off again. But right now, the bullish complexion of the market here is still intact. So this should bode well for gold in one of two ways, gold and silver. First of all, with interest rates coming down, that means storage costs, the interest rates for storage costs go down. All right, so it makes it more attractive to store your physicals. All right, that's number one. Number two, remember that gold and silver prices are not just generally relegated to the same cause and effect as other uh, commodities or currencies are, and that the reason being is because gold and silver have a chameleon aspect to them in that they're a commodity, but they're also a currency. All right, gold and silver is money and nothing else. So that's why. All right, here's your silver on the daily chart. No, your eyes are not deceiving you. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 down days out of the last 13 trading days. So you can see silver looks bad. It's trading at the lower end of its range here on the daily chart. It's pulled away from that momentum line. It's pulled away from that blue momentum line. It's totally pulled away from it. You guys can see that with your naked eye. On an intraday, we rallied back up to the trend line only to get sold off back down again. It is typical when prices are falling like this for them to get back up to the trend line resistance, and most algorithms and trading programs use this as a opportunity to get short. So it's kind of like selling the intraday rally. You can see it better here on this 4-hour chart, and I'll pull it up on the big chart for you real quick so you can see what I mean. All right. Every time the price got back up to the blue momentum trend line, it is sold. Whenever it gets up to the purple intermediate trend line, it is sold. That is a trend that keeps on going. That's what we mean by trend. Until that cycle or trend ends, that means we have not found a bottom yet. Okay, we have not found a bottom yet. Just looking at this intraday chart on its own. If you take a look now at the weekly chart, which shows the bigger picture, you can see we are in free fall. All right, our support is nowhere to be found. We do have a psychological support at 16. But I must tell you that even numbers on the way down don't hold as much merit as even numbers on the way up. So this is a psychological support, but it's not a real support. Your real support is, if you can see my cursor, look to the right of the pointer. You see that gray and black, the 15,665 on the chart there to the right? That is where your true key support is. All right, so that's almost $1 away. So that is the initial target for silver right now. All right, as far as finding any kind of support or seeing a slowdown in momentum based on this weekly chart. All right. Okay. I see some questions already popping up. Let's see. Someone asked about AG. Hold on. Let's pull up AG. All right. AG is has the same kind of complexion as silver right now, as you can see. Oh, okay. Well, it's up on the chart. So if you guys are looking at it, it's in free fall mode too, but it's not gaining as much momentum as silver is to the downside. Anyone that's in AG, there you have it. All right. And this is a weekly chart. You're going to find your support around $7.11, somewhere around there, give or take a few pennies. All right. This is where I opened up the floor. Now, the mics are hot. That means anyone who has their mic turned on can ask a question, or you can type your question. It's up to you. Anybody have any questions? Anyone who is not part of the Black Ops Trading Room have questions about, the service, what we do, anything you want to ask me directly? Now's the time to do so. All right, let's see. Here's a question. Is JNUG still a buy and hold for you, even though they suspended not issuing more shares? No, JNUG was never a buy and hold. We don't buy and hold. That's not what we do. We trade. Now, with that being said, there are positions that we put on that we will hold per se longer term because it's fun to do so. So every now and then we get a position, like for instance, follow me up, follow the cursor over here. You see dry ships and knick-knack paddywhack. If you were to go in and buy 100 shares of dry ships right now, your cost is nothing. All right, so you could buy the dry ships right now for 100 shares, and it could go to zero, and you're not hurt. All right, so there are positions like that. We'll do that. We'll buy 100 shares of some cheap stock that we may like dry ships and knick-knack. You know, it's one of our favorites. We just like to play around with them. We'll buy and we'll hold it when it gets cheap like this. Because what are they going to do? You know the company's not going out of business. It's not going anywhere. So you can go ahead and you can hold that, and that's your play money. That's your little lottery ticket. If it decides to take off, something happens, boom, you know you in the game. And then you can add to the position at that point. But that's what that is. So even with JNUG, when JNUG was dirt cheap, we knew the reversal split was coming and all that. So even at this price here, it's still vulnerable. JNUG is very vulnerable. Let me show you what I mean by vulnerable. JNUG derives its price, meaning it's a derivative, of GDXJ. So as goes GDXJ, goes JNUG. GDXJ is pulling away from the momentum trend line here, and it's in free fall. All right, it has no support until you get down. You got a psychological support around the 27 level, give or take a few pennies. And other than that, that's where we're headed initially. That's the initial. Hopefully, that'll be your floor. All right, where this thing could start building a bottom, and you'll get another one of these moves here. All right, that's what you're hoping for. All right, but this is trading. This is not hoping. So if you're long, you're wrong right now in GDXJ. If you're long, you're wrong. You got signals to get out back up in here. You were told to get the heck out of the market. If you were long up in here, you were told to get the heck out of the market by this bar here. If you're still holding, you're wrong. This is a $30 stock. You are wrong if you're long. Okay? The thing to be doing here is shorting. So, what you do is you come over here to your JDST, and you get long the JDST. That's what it means to get long the paper. All right? Timing is important. All right, question here. What do members get when they join the Black Ops trading room? Well, you get a lot of things. The first thing you get is access to yours truly. The second thing you get is access to the premium trading room, where you're joined with traders from all around the world. Some are new, some are experienced. We got people from all walks of life. So you're not alone. Also, you get unlimited admission to the Learning Academy, where there's tons of how-to webinars, training, all that, ongoing stuff like that. Also, I'm sure you probably saw the pre-market PulseScan report. Well, on YouTube, you get the audio version of that. Members get what you're getting right now. You get to see everything, and we go over the other thing that you get, which is the weekly post-wave price triggers. That's how we make money, is with the price triggers. Price triggers tell us when and how to get in and out of the markets. And that's what you get when you subscribe right now. All right, next question is, did you see what happened to BCIE Monday? It was a lotto ticket, just like dry ships, 7,000% move. No, I did not see that. BCE, is that the actual ticker, or is that just a acronym for the thing? Let me see if I can pull that up. Are you talking about, is it one of these here? Which one are you talking about? What is BCIE? Bonanza Creek? Okay, let's see what's up. Let's peep this Bonanza Creek. Whoa! That is crazy. Nah, see, this is not something that I was privy to. Wow, whoever was long this is very lucky. But this is, yeah, this is what I mean. You know what I'm saying? This is what I mean. Things like this can happen. We have something like dry ships you mentioned. Dry ships is something we all have at least 100 shares in our back pocket because dry ships has been known to trade at thousands of dollars per share, and we know it can do it. Why is this thing moving up like this? Does anyone know? Is this an algorithm type move or is something going on with this? Anybody have any knowledge about this? Because I know nothing about it. I don't even know what this thing does or what would precipitate a move like that from a $2 stock, and it traded as low as 42 cents not long ago. Wow, that was back on the 28th. Interesting. I have to look into this one. I don't even know if that's on a sheet or not, but I'll look into it. Let me see. While we're talking about it, let me pull up and see if there's something that is on our list. Because if not, I will watch it and we'll see what's up. I'll track this. It may even be a short. Let's see. Bonanza Creek. Okay, Bonanza Creek Energy. Interesting. Very interesting. Yep, it wasn't something on my list, but I just added it. So but the Bonanza Creek Energy is on there now. So we will be watching that when we update the system tonight. They were under Chapter 11 bankruptcy, then emerged out of it. Okay. Shares would have been suspended. It's, yeah, could have been. But see, here's the thing though. If you owned the shares before all of that, boom, bam. Depending on where you bought it. If they didn't suspend the shares back when it was, trading at pennies or a buck or something, once again, if you had 100 shares of this, that's $1 a penny, and you go from $2 to $40, that's still a nice piece of change in your pocket. You know what I'm saying? So, boom, bam. That's something to watch. So, trading room, I just added that. So that'll be under our daily tab, daily and weekly tab, depending on what the data looks like. I don't even know. Let me see. How far does this thing go back? What's this? Let me pull up a weekly and see. As long as we got enough data, it should populate. All right, it looks like it may have a lot of data. Okay, we're gonna definitely watch this. All right. Anybody else have any questions you want to ask me? Now is your opportunity. Hit me up. What else you want to know? Anybody, anything. The mics are wide open too. If you want to talk, you can talk. It's all good. Somebody says, anyone getting rich? It depends on define rich. What do you mean by rich? Everybody has a different definition of rich. You have to ask. I'll let someone else answer that in the trading room if y'all want to. Y'all can chime in on that one. I'll put it to you like this. For what we do, we make good money, all right, in these markets because of the approach, the systematic approach that we use. We use algorithms. We don't just, try to look at charts and find pink elephants and giraffes in it. And really, it varies from person to person. Not everybody has the same, risk capital to work with. Not everybody trades the same markets. It's one of those things where you have to come and see for yourself. I put it to you like this. If nobody was making money, then these markets wouldn't exist. These markets exist because this is what we do, and this is how we do it. You tell me. Go back and look at my videos on YouTube. You tell me. Every video that I've ever done is still there, going all the way back to 2010. I have not deleted any videos. Win, lose, or draw. All my stuff is there. You tell me if you think I know what I'm talking about or not. It is what it is. It's a business. You have to approach it that way. This is not a get-rich-quick scheme. This is not a lottery ticket. This ain't Las Vegas. This is a better way to invest, to start a business, to have an extra income stream for you and your family. All right, it's not a game. It's not a joke. We have fun. Don't get me wrong. We have a ball. But you got to know the truth. So let me just run it down for you. I'm gonna run down you the truth. All right, bear with me for a little bit because trust me, you're gonna get some nuggets out of this. Okay. Back when I first started working on Wall Street back in the 90s, the average day trade, this is when you're day trading, the average day trade profit nationwide, when they averaged it out, was $62.50. I'm not making that up. That is coming straight from the SEC. Now, when trading commodity futures really started kicking off in the late 90s, the average day trade profit went up, and it averaged between $250 north of $450 to $500, depending on what instrument you were trading. And that was an average daily return, okay? And I'm not bragging, I'm just giving you facts. My average profit for my clients was about $1,100 a day. And I focused on the Dow, S&P, and NASDAQ futures. That's all we did, all right? And we day traded that. And I loved it. Now, over time, the markets have shifted. Algorithmic and program trading has taken over. You can no longer day trade the way you used to. It's different now. Therefore, what we look to achieve to do, and I tell my people in the trading room this all the time, those that are here in the trading room can chime in. If you see yourself in a profit, I always educate to tighten up stops so that you can take profit, because you'll never go broke taking profits. And I always say at the end of my videos too that bulls make money and bears make money, but pigs get slaughtered. You never want to be greedy. If you make $250, $300 a day, that's good money. Most people don't understand that making $500 a day makes you a millionaire. Most people don't get that. But, you know, it's one of those things where you have to learn and you have to grow and you have to develop. And you can't be greedy, I'm telling you. When the money starts moving, the markets start getting volatile, and you just making money, you think that it's falling out of the sky. But then you'll learn that there are days where you will give back some money to the market, because that's the cost of doing business. So you have up days, down days, up weeks, down weeks. You may have a bad month. You may even have a bad year. It's not impossible. I use an approach called trend following. So overall, everything averages out in the end. So at the end of the year, if you take every signal, take every trade like you're supposed to, you average out and you come out ahead. I have a model portfolio thing that I have, and I post the links at the bottom of my videos where you could go and you can look and you can see that. It's also at my my blog. I'm sure you guys have seen that, but if you have not, I'll post it here. Let's see. Yep. That way you can see it. And I don't know what the header is. I think it probably says portfolio or something like that. You can get an idea, and it shows you, the equities that are in there and all that good stuff. It's a fun thing to play around with. But I use that and I maintain that to give people an idea of what I'm talking about. Some things you have to see for yourself. You have to look. You have to, see what's what. Now, since we've been talking, and since you've been here, logged in with me, let's take a look over here. There's something that I said to you. I don't know if you picked up on it or not, or were paying attention. So let me just pull it up, and then you tell me what has happened, and if you can make money in these markets or not. All right, here we go. This is an intraday chart. This is a bigger chart of this chart here at the bottom, I was explaining to you something that was happening right before the Fed announcement. And I showed you that prices, every time you're in a well-defined trend, that when they come back up to the trend line, that's a selling point. Well, as you can see, as we're talking, you can see that happened. It came back up to this trend line here. And then what happened? It was used as a selling point, and now the market is falling back down again. Now, just armed with that little bit of knowledge right there, do you see an opportunity where you could have made money? Had you shorted it when it was up here, this trend line like that, you could have been in profit on the way down. It's just that simple. You can't make this stuff up. It is what it is. That's why I love doing these webinars, because you get to see what I am saying to you in real time. Now, pulling up the hourly chart, that's the 4-hour chart. Pulling up your hourly chart, you can see it a little bit more defined. As we have been here talking, it was up here, right? And then it quickly fell back down again. Let's bring it up a little bit more. Let's pull up a 5-minute chart. I know we have negative Nellies. They say, oh, that's not true. Well, here it is right here. All right, the timestamp on this one here is around 1:55 p.m. Eastern Standard Time. This right here is the release of the news at 1400. And since then, we have been what? Falling. Came up here, touched the trend line, and came right back down again. Can't make this stuff up. It is what it is. So, now let's do something fun. I like doing things sometimes spontaneously. So let's do it. Let's kill 2 birds with 1 stone. Y'all ready for this? Let's do some live trading. Why not? And we'll do some futures real quick. All right, let's take a look here. I'll let you guys choose. What do you want to see? Gold, silver, crude oil, S&P, NASDAQ, Dow. What y'all want to see? Somebody give me one. All right, sometimes someone says gold. Some says the Dow. We got 3 different ones. Till we get it. Dust, gold. Okay, gold has 2 so far. Anybody else? Do I have a second on gold? You got the Q. Y'all want to see a little bit of everything. All right. Anything that moves. Okay. All right, let's see. Anything that moves. Okay. Let's see. Breaking news on oil right now. Oil price rebound after falling sharply. All right, let's take a look at crude oil. All right. It has come up and is reversing down. Let's get out of there. Have a little fun here. All right, this is our 1-hour chart. It's coming up here to the 1-hour chart. Let's look at the 4-hour chart. All right. All right, this is what we're going to do. This is what we're going to do. Let's see, 47.90, 48.05. Okay, this is what we're going to do. We're going to do a live trade. Okay, question. Let's see. What is PulseScan? All right, what is PulseScan? PulseScan is the name of the trading system methodology that has been in development for over 20 years. So that's the title that I gave it. That's what PulseScan is. It's a series of hundreds of algorithms that create, if you will, a terminology that everyone understands, blockchains of algorithms to create a complete and robust system. It has entries, it has exits, it has support, it has resistance. Pretty much everything that can be known, that is known, is factored into price. Therefore, PulseScan takes a look at market depth. It takes a look at bid and ask spreads. It takes a look at put-call ratios, things that are price specific. And that's what PulseScan is. Then it comes up with where those key price points are and takes advantage of those price points. So it's not uncommon for the pulse wave price triggers to equal the highs and lows of the day before the markets even open. That's what PulseScan is in a nutshell. All right, I'm going to do some live trading here real quick because I want to demonstrate and show something to you guys, okay? Now, this is not the pulse wave system. This is just me using years of experience and things in the markets just to show you how the markets move to give you an idea of what's what. All right. So win, lose, or draw, this is what we're going to do. I just want to show you how machines have taken over these markets and how things that you think may happen, should happen, or supposed to happen may not happen. And this is why you need an edge. This is why I created the pulse wave price triggers. Are you ready? All right, let's get into it. Our first thing that we're going to look at here is crude oil futures. This is the crude oil futures right here. All right, this is oil. Now, what we're getting ready to do is we're going to put a trade onto the crude oil. As you can see, this market on the 1 and the 4-hour chart has been in a steady decline. Okay. What I am anticipating is not a further bounce, but a rally that is about to be sold. That's what we're looking at right now. So we're going to do one or two things. We're going to put on a few trades here, and we're going to see what happens, so you guys can get an idea of how these markets move. All right, so we're at, let's see, 47.65. Okay, first thing we're going to do, I'm going to click this, and I'm going to put in an order. All right, I'm going to make this big so you can see it. Hopefully you can see it. All right. Let's see. All right, here we go. All right, we just put our order in. You can see that it filled right here. That filled at like 47.80. Okay. Place the stop just above here, above this this resistance line here. And what I'm looking for is a run back down here to test this intraday support around the 47.30 level. All right. So that is the trading plan. All right. I'm wrong if I get stopped out and the market rallies up. Then I will be wrong. But I believe that it's going to fizzle out right here. I see this bar, this current bar becoming this bar here, leading to another leg down. So that is the anticipation. We're trading with the trend because the trend is down. All right. And that's what we're doing. That's the trading plan for right now. Another thing we're going to look to do here too, it's kind of a double play. Let's pull up the hourly chart so you can see it. All right, on the 1 hour chart here, you can see a little bit clearer. If this support is taking out, and that's around the 47, 57 and a half, then the momentum should pick up to the downside, of which we will also be short. All right, so there you have it. That is the trading plan in the crude oil. The only thing to do now is to wait and see what happens. Will the market do as anticipated or not? All right, so this is what we're watching right now. All right, someone else asked me about something else. What was it? Let me scroll back through here. So anything that moves. Let's see. Let me scroll back. All right, there's another question up here. I knew I missed something. Okay, it says, you keep saying you can't get all the information needed to trade just from the chart, but need to use the algos. How are you reading the algos and how does that work? All right, I think I answered that. But if not, if there's still something missing that my answer wasn't to your satisfactory, go ahead and let me know. Okay, now that Bitcoin is reaching your $1,500 target, what's the sell price? There is no sell price per se right now. That market is still super bullish right now, like the NASDAQ 100. So there's no selling short price. As far as sell price, if you mean where would you take profit, I like to take profit along the way. So I would be taking money off the table right now and looking to get back in. That's what the post-wave price triggers do. They help you to take profit as well. So I would let the market take me out with profit at this point. I wouldn't just pull the trigger. Do you think ETFs will eventually go out of control? Define out of control. Do you mean to a point where they'll just start moving up, like the NASDAQ 100's been doing or like Bitcoin's been doing? It just depends on the market. I think that GDXJ and GDX are going to go bananas, absolutely, to the upside, along with SLV and GLD. Yes, I do believe that once the bottoms supports have been established, yes, I see those markets going much higher. You said on V Show that you're out of the market on days when news comes out. Does that mean earnings days too? Yeah, let me explain what I mean by out of the market. For instance, today was FOMC day. So I did not place tickets this morning ahead of that. I wait until after the news comes out and then I'll place my new positions. I do not like to open new positions ahead of big major announcements. There could be market moving. If I'm already in a position, then I'm just in a position. But if not, I'm not going to initiate a new one ahead of a news event like that. Let's see here. Did I miss anything else? Okay, cool. All right. Anybody else have any other questions? I'm hoping that I'm answering your questions to your satisfaction. Let's see. Next question. When is a good time to get into GBTC? All right. Yeah, that's the Bitcoin ETF. Let me pull that up for you so you can see that. Then we'll come back to the crude oil. All right. Technically speaking, now is a good time to be into it because it's been on a tear, as you can see here. This is a 1 hour chart. You tell me. Look at that. It's above the trend line momentum. It's looking good. The post-wave price triggers have been long this thing since it was back here in the 120s. So if you go back and look at my prior videos where I discussed the GBTC, you'll see that the system has been long in this thing for a minute. So that's the beauty of the post-wave price triggers too. With your subscription too, you guys who are new to this, you have access, open-ended access, unlimited access to all the past price trigger sheets as well. What you get is you get a daily sheet that updates around 11 p.m. at night. You get an updated sheet, and it has the list of all the securities, stocks, futures, forex, Bitcoin, and it tells you where to buy and sell. And you also have unlimited access to all the past sheets, going as far back as we have in the archive folder. I mean, you can look at those anytime you want. The Learning Academy, those videos are downloadable. All right, you can download those and save them on your hard drive and go back and look at them later or what have you. It's wide open. All right, so you can learn at your own pace. But I did design this system so that you could make money as you learn. You don't have to become an expert before you start making money. All right, you can follow along with the instructions and still make money as you learn. At the end of the day, that's what this is about. It's about making money, all right, over time, adding an additional income stream for you and your family. It's going to be more and more imperative in the coming days. I'm in the process of doing another video series, Lord willing. This one's going to be a little bit different. This one's going to be called the end of humanity, and I'm going to be showing you how the market is not going to collapse like a lot of people are thinking. Neither is our currency going to collapse. As a matter of fact, it's going to be replaced. And that's a difference between a collapse and a replace. I'm also going to show you, you jumped ahead of me. Someone just posted, debt is infinite. I'm going to show you that a reset's coming, but it's not the reset definition that most people are saying when they say reset. What I mean is the whole commodities thing, the derivatives thing, all that stuff is going to be erased and reset electronically, just like it was on 9/11. If you haven't already done so, check out my video series on YouTube, There Is No Collapse. That is coming again. I believe they've been preparing for it. They're going to do it again. They just need another 9/11 type event in order to roll it out. That's what they're going to do, and I'm telling you, that's exactly how they're going to do it. Every one of you who are listening to me right now, you need to prepare for a jobless economy, because that's what's coming. Within the next 2 years, you mark my words, there's going to be a jobless economy. Jobs are going away. There will be no such thing as work and jobs anymore. Everything's being automated by machines, computers, algorithms, droids, robots, however you want to call them. That's why they're pushing for the universal income. And to my understanding, they already have rolled out a pilot test of this in Europe. I don't know if it's France or one of those places. They're rolling it out already. All right, let's see. Question. When we hear about the big banks dumping gold and it's supposedly brought back real quick, in a couple minutes, is that actually just the banks repositioning their shorts to long and longs to short? Yes and no. What happens is when you have those intraday blips like that, what typically happens is, yes, the banks are shorting that market to raise funds so that they can prop up the dollar and the stock market or bonds, whatever they need to do. That's what they're doing. When it comes right back up again, yes, what ends up happening is there are people that participate off the Fed. The Fed doesn't trade based on our definitions of trading, how we see it. They just maintain and control and manipulate markets. Goldman Sachs and JP Morgan get to benefit as benefactors, as agents of the Fed. They're the ones going in there and trading and buying it back up. All right, so the Fed goes short, takes profit, sells to JP Morgan and Goldman Sachs. Their algorithms push the markets back up. That's how that works. The Fed's not buying it back. The Fed is just shorting that market. Yeah. All right. As long as the markets exist, we good. Exactly. But how can the real physical economy support a fake economy? That's a good question. Let me answer that for you. The economy is fake. The economy has always been fake. Like I said, check out my video series on YouTube titled There Is No Collapse. You will see that I document and show you that it's always been a matrix economy. Just because someone changes a number in a computer can't change the real supply and demand. That's been manipulated too. I know you've heard of artificial demand, right? Artificial demand, that's what it is. Artificial demand. Nintendo and Sony do it all the time. They'll come out with a new game, right? Dope game, off the hook. Like the new Call of Duty that's coming out. It's supposed to be off the chain, right? Or the new Tekken 7. It's going to be all of that, right? Can't wait for that to come out, right? But what they'll do is they'll come out, they want to push pre-order. So they'll make you pre-order it, but they'll only maybe give 3 physical copies to your local GameStop. 3 copies. You may live in a city where there's millions of people. Or a town where there's a couple 10,000 people. Still 3 copies. That's it. They're creating an artificial supply and demand, punishing those who didn't pre-order it. Or better yet, a better example would be recently with the Nintendo Switch. If you didn't pre-order that, you're just out of luck. I just came out of the GameStop the other day. I know the supervisor there, and we always chat and stuff. And he was saying, I asked him, I said, so have you gotten any Nintendo Switches in, as far as used ones? Anyone brought them back? He said, not a one. He has not seen a used Nintendo Switch. And they don't have any Nintendo Switches in the shop either. So they create this artificial demand. That's what they do. That's how they do it. It's a game. Let's see. If jobs going away from humans, then how will humans support themselves in a new matrix? Oh, you're trying to get me to go in and spill the beans. But I'll tell you, hey, you guys came here, so you get a treat. You ready? Here we go. The first thing is this. With a jobless economy, everyone is going to get a welfare check from the state, if you will, okay? Or a disability check. Whatever you add any title you want to on it. Everyone receives a monthly stipend from your state, right? And you get that every month. You have to live on that. That's how the jobless economy will work. You still will have to take that money and spend it because you have to eat, you have to do things with it. But that's all you're going to have. You will be on a fixed income. If you want to generate more income, you'll have to find ways to do that. And you won't be able to find a job because there will be no such thing as jobs. Not in the sense that you know it now. There will still be jobs. Don't get me wrong. There will be jobs. They will just be extremely limited in number. And they will be highly skilled jobs. Like, keeping the machines and algorithms running. If you're not in that line of work, then you'll be out of work. All right? So that's how that works. So basically, it's going to force people to be entrepreneurs. And that's going to be very difficult to do also in the jobless economy, believe it or not. Very difficult to do. So it's a weird thing that's coming, but there's no stopping it because people are already clamoring for it, begging for it. Fiat money is never going to be replaced. I repeat, fiat money is never going to be replaced. Someone just asked that. What do you think will replace fiat money? Nothing. Fiat money is going from physical, tangible paper and coins to digital. The government has already been in the process of creating their own, what do you call that thing? You guys help me out. I can't get it out. What do you call it? We call that chain, that wallet, that blockchain. Thank you. Yep, you knew what I was thinking. They have their own blockchain, their own thing. Because remember, it's all about control. Electric digital currency is about control. It's not about making your life or my life any easier. FX operator, you are going ahead of me. Yes, the end game is eugenics. The end game is merging humans with machine, but not all humans. Only some humans. The elite. Okay? So with the jobless economy comes the culling. That's part of the culling. They don't want to have to take care of everybody because at that point they don't need as many people. Right now they need people. But then they won't need as many people. So what will happen is they'll have to cull everyone. What is the easiest way to cull someone? Is it thermonuclear war, World War III? Of course not. They don't care about that. They don't want to hurt their buildings and their infrastructure. Are you kidding me? No, and they don't want to hurt their land because land and territory is about power and control. No, 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 no. When you want to clean out the fish tank, do you shoot it with a shotgun? No. You dump out the water after you remove the fish. Then you clean the bowl. They're just going to remove the fish. They're not going to hurt their precious fish bowl. No, they're just going to take a few fish out. Or if you don't want to go through the trouble and the hassle of doing that, hey, you got those exotic goldfish, the really big ones. What do? If you want to cull the herd a little bit, throw in a piranha or two. That's it. You got a couple of thousand goldfish in a giant fish tank. You throw in a piranha. Throw in a couple piranhas. That'll cull the herd a little bit. and then you take the piranhas out. You put the you release the piranhas whenever you need to call the herd. We do it now every day across this country, and no one says anything. It's called hunting season. When they need to cull the herd of deer, what do? They move up the they give a special hunting season. All right, we need to cull the herd, so we're going to open up hunting, and here are the rules, and here's the location, and here's the short time window you got, and go happy hunting. That's what they do. So, and yes, someone just posted. The foods have been taking people out for some time now. Yes, the poisonous food, the poisonous air through the chemtrails, and also poisoning the water supply. Absolutely. Yes. You guys know what time it is. Like I said, you guys are the best. You guys are the best audience in the world. So a lot of you remember the late great Charlie McGrath. So yes. Yep. You guys know what time it is. All this stuff is real. People want to deny it all they want to, but it is real, every bit real, and there's nothing that people can do about it except for wising up. All right, so let's look at our little experiment here, our little trading experiment. As you can see, the market ain't doing too much. It's pretty much right where we left off at. It's not moving too much. This is where it's at. All right, so this is one of the aspects of trading, as you can see. All right, so we shorted this crude oil around the 47.80, right where we got in at, and it's not moving. It's like kind of like frozen for a minute. Nothing's happening. This is an aspect of trading you got to deal with. And I chose this market for a reason. This is one of the most gangster markets in the world, number one. And number two, things can happen and to upset you, especially on an intraday basis when you are attempting to day trade the markets. This is why I don't day trade. I use the system because here you are stalled now. Chances are I'm going to predict to you what's going to happen. Based on the way this thing is moving right now, there's a big chance that this thing is going to sell off into the overnight market. However, it might stop me out first in the process. We'll see. I never put on a trade expecting to lose, but sometimes when the markets are dull and nothing's happening, there's an old rule: never short a dull market. And right now the market's being dull, but I shorted it because I want you guys to feel how this thing moves and how it looks and what you're up against when you come into these markets, especially blind without a system, just looking at a chart and trying some chart analysis. You can get lucky sometime, but most of the time you're not going to average out pretty good. You need a systematic approach. And here with this crude oil, this is a crude oil future for those of you that's joining us. This is a crude oil futures chart. We did a live trading example. I shorted this crude oil around 47.80. It's starting to move back down now in my favor. And we have our stop just above the trend line resistance up around here. And we're going to see how this thing plays out. That's what we do. That's how we roll. I want you guys to get an idea of what trading is like for those of you who've never done it, so you can understand what we do and why we do it. For those of you who came late, the reason why I put this trade on too is to show you the reason why the retail person just can't just look at charts and just trade and figure they know what's going on and they're going to be all right. You're competing against algorithms, and the algorithms are very powerful, and they're able to defeat you. Even if you're right, you can still get your behind handed to you. All right, saying it nicely. So that's one of the reasons why I put this on. I want to show you that these markets are real. This is what happens every day, and you need to see it for yourself. And then in doing so too, you'll learn, how and why we get into these markets and take advantage of what we see. All right, let's see here. If you buy something from your daily sheet, do you sell it by the end of the week if it's still bullish? That's a very good question. Yes and no. Yes, in that I'd like to go home flat on the weekends, and that's from back in the day. Um, and there's a reason for that. I'm sorry. Hold on 1 second for me, guys. All right, I do apologize for that. Thank you for your patience. All right, as I was saying, as far as the weekly situation, I like to be out of the market by Friday flat if I can. I just don't like being vulnerable when in the overnight situations we have no idea what can happen over the weekend. A lot of nefarious things have taken place over the weekend in the past couple of years. So, with all the wars and rumors of war talk and foolishness, it's just better to have a clean slate if you can and go home flat on the weekend. Let's see what else we got. Um, how do you know when to act upon a rally alert from your pre-pulse market scan? Pre-market pulse scan. Okay. How do you know when that? Well, again, we have what is called post-wave price triggers, and these price triggers give us the, it rates every security and tells us based on the rating which one is in play and which ones we should target and look at. So the system tells us when to get in and when to get out of a market. How much trading capital do I need to average 1G a week plus pay for a subscription? Well, here's the rule of thumb as far as risk capital is concerned. Obviously, the more risk capital you have, the better your long term success will be. The number one reason for that is because if you are undercapitalized in any business venture, it can work against you. All right. So, for that reason, you're going to want to have as much risk capital put aside as you can. Another reason you want to have, a lot of risk capital as much as possible is because that there's a thing called margin. And if you're trading futures specifically, there's initial futures margin, and then there's what's called maintenance margin to hold the position overnight. And depending on what you're trading, it has different margin requirements. So obviously, a person with $100,000 of risk capital has an advantage over the guy who only has $10,000 worth of risk capital. Back in the 90s, you needed an average of $10,000 of risk capital to trade commodity futures or forex. With stocks, you need at least 50 to 100,000 to day trade stocks, because you need at least 25,000 in margin at all times if you're going to be day trading stocks, and that's because that's what the government decided that you need to do. That was done after the NASDAQ bubble burst in 2000, and really pushed forward even harder after 2001, after the 9/11 situation. So they say that you need to have that. All right. So obviously, if you want to make a G a week too, even if you had $1 million in your trading account, you say you want to make a G a week. Well, remember, with profit comes risk. So depending on how much risk you are willing to take will determine what your, profit will be. So you have to set out and say, okay, what is my profit objective? If your profit objective is a G a week, then you have to understand the risk that goes along with that. All right. I wish I could tell you that every trade you put on is at least a 3-to-1 risk to reward ratio, but sometimes it's not. All right. Sometimes you're assuming more risk for a possible smaller reward. It's just like the nature of trading, so to speak. So you just have to be willing and understanding that that's what you're doing. I'll give you a good example. All right, let's say today, on today's sheet, this crude oil thing that I just put on. Let's say that today the sheet said I needed to sell it. Let's say it opened at 47.77, and that's on the 5-minute chart. Hold on, let me get in. Let me pull up the daily chart real quick so you can get a better picture of it, so I can answer that question a little bit better. All right, so coming into today, this is today's thing here. Let's say that today the price trigger to get short, according to the sheet, was at the $48 level. All right. Today this got the 48.22.5. All right. So technically speaking, it got down to 47.30. So I had the potential to book profit after it got below 48. When it got down to 47.30, I had the potential to take some profit right then and there. Well, if you know anything about the crude oil futures, you're looking at about I think it's $5 a point. So technically speaking, you have the opportunity to make close to $500 today. Pretty, not quite 500, but close to it. So we'll be conservative and say you were able to book $300 of that potential today. All right. Well, there you go. That's just one futures contract. But now your risk on this particular trade today, with that being said, would have been about 1.5 points. So you would have been risking, let's say, $800, $800. But today you were only able to pull off 300 in profit if you were watching it and you were fast with it. So that's a pretty good example right there of, what we mean when we say risk reward and things like that. So that's what that is. All right. So again, another thing too, I need to put this out here because you guys need to understand this. You have no way to determine what your outcome is going to be in the market. We take what the market gives us. I would love it if every trade minimum I could walk away with $1,000. It doesn't work that way. Don't get me wrong. I have made more money in a day than some people make in a year trading. But the markets don't always move like that. Look at this chart. Let's take a walk. Look at this. This is a daily chart. I want you to look at this. This is crude oil futures. Okay, as you can see, today's bar right here is shorter than this previous day's bar. This day, the trading range was 49.27 down to 47.35. So you had roughly 2 points, or, all right, so yeah, you had 2 points or $2. So let's say $1,000 was on the table for yesterday. All right, top to bottom, $1,000. Today so far, your high is 48.22 and the low is 47.30, not quite $100. So this bar here, there was more money on the table here than it is today. Today is very little money. The day prior, you can see, is also smaller than this one. So you see there's very tight ranges some days, and then some days you have this long ranges. Here's another wide one right here. See what I mean? So profit is not determined by you, it's determined by the market. You don't know how much money is on the table from day to day. All right, another one. Let's look at another one. Let's look at Apple. So you can see another perfect idea of trading ranges. Apple has been flat for a minute. Look at this. Look at these. You can't even see some of these bars. This one right here, this is a daily bar. You went from 142.04 to 141.11. Again, not even a full dollar is on the table. You're lucky if you get 80 to 90 cents on a trading range in a day. You can't do nothing with that. Where your money at? So sometimes you got to hold the position for a minute in order to ride those profits out. Does that make sense? That's why I can't guarantee you $1,000 a week. Now, what you could do, and you'll learn this when you go through the Learning Academy, but what we do is on times of lower volatility, you can trade heavier because the range is not as wide. So you need to trade more shares to make that G a week you're looking for. Times of wider volatility, and then you lighten up, all right, because your risk is greater. All right, so that's how that works. Oh, someone just said Bitcoin has breached 1,500. Okay, well, there you go. Now, back when Bitcoin was hundreds of dollars lower than it is right now, I did say that 1,500 was my initial target by the end of this year. And so far, as you can see today, it has done that. So, I don't know, man. You guys tell me if I know what I'm talking about or not. I see someone has a comment. Dex, I am the guy that has screamed from the rooftops back in the Charlie days that you were the one guy that was telling everyone not to fall in love with silver as it approached $50 in 2013. You are the one guy I trust in metals. What is your take on metals in this future fixed economy you were speaking of 30 minutes ago? Well, I'm going to hold to my long-term trajectory that silver and gold and the gold mining stocks at one day, compared to today, is going to be considered priceless. I believe with all the shakeup coming, with all the economic woes and the new age political scene, I believe that those things are going to get priceless. Because people are going to wake up and realize, oh my goodness, and it's going to be panic buying of gold and silver, and the gold and silver mining stocks is going to explode. Because the truth is going to come out too about what's going on with the gold and silver manipulation and how certain countries don't have any gold like the U.S. Hint, hint. And it's just going to go, it's going to be bananas. That's what I think. Now, near term, just like I said in my last videos, we were bottoming out, so to speak. And that we're in free fall in silver, for instance, and there's no end in sight just yet. But my long-term outlook is still the same. I see it screaming. All right, and thank you. I appreciate that, sir. You're one of the people that remember back in those days. I remember the very day, on an intraday basis, I remember back in the trade room back then, I did tell everyone that was it. The highs were in and get out of the market. And everybody thought I was crazy. They thought I was nuts. Because they thought the trend was going to continue forever. And I told them, no, that's it. Let's see. Someone said you said $16 silver and $1,500 Bitcoin 2 weeks ago. Yep, yep. That's about right, and that's kind of where we headed now. I mean, we're in the $16 handle in the silver right now. We're at 1658. We hit 1652 so far today, and doesn't look like it's going to stop anytime soon. That's just what's up. Yeah. So pulling back up the crude oil thing so we can monitor this whole situation as it plays out. Yeah. So this is the day in the life. This is what it is. I'm expecting to get stopped out in this gold, but I mean not gold, this oil, because I want you guys to see just how this thing is volatile and how it moves. I wanted to show it so you can see it in real time, get an idea of how day trading, even though you do everything right, you're competing against the algorithms. On an intraday basis, you cannot win. It's hard. That's why I use the system. The system tells me when to get in and out of something and at what price. And we don't move until the system says so. That's just how we do it. So this is like a perfect example for you guys to see that in real time. And that's what I'm waiting for. And I'm looking for something real quick. And I don't see it. I don't know what's going on. Give me a second. Let's see. I know that the exchanges changed tickers on me, so hold on. Alright, here we go. And let's see what else we got. Bear with me. Alright, I guess that's gonna have to do for now. Just making a quick update here. Okay. Alright, I'm trying to find something, so just bear with me. Alright, here, found it. Okay. Alright, so let's see. What? Alright, now it should be noted that on this one here, according to the system, we were looking to get involved at 47 and a quarter. All right, so it has not breached that yet. I went ahead and took a risk on the top side, so we'll see if that plays out. But either way, we're going to catch it top side or catch a break if it crashes through support on this crude oil. For those of you that are late, that's what we're talking about. If it breaches here, then we're gonna go ahead and get involved. All right, so that's what we're looking at right now. All right, okay. Any more questions? You guys have some pretty good questions so far. Anybody? All right, let's see. Here's one. As someone with 10K trading money and 2 week days open to tune into your service, would you still advise that person to join your service? I don't know if I understand the question. What do you mean 2 week days open? I'm sorry, I don't understand. What do you mean by 2 week days open? Nah, I'm in the DMV, man. Washington, D.C., metropolitan area. V is up in New York, though. Yeah, what do you mean, DT? What do you mean? as someone with 10K trading money and 2 weekdays open to tune into your service. You mean you only have 2 days per week? Is that what you're saying? I am open 2 days of the trading week to tune into your service. I work the other 3 days. Oh, okay. I see what you're saying. Okay. Well, let me ask you this. Do you have any trading experience at all? Because if you have trading experience, then you should be fine to follow along. But if you have no trading experience whatsoever, you never even bought a stock a day in your life or traded commodity futures or forex or even Bitcoin for that matter, then there's a bit of a learning curve just for you to learn how to execute your orders and put tickets in with your broker. Most of that, though, is explained for you in the Learning Academy. As far as the 2 days that you have to dedicate, that's fine as far as being able to ask me questions and set in on the live webinars that we do throughout the week and things like that. So that's fine. Your experience with trading stocks, not options, don't worry about it. I hate options. I absolutely loathe options. I do teach you how to trade them effectively and correctly, but I loathe them. I don't even use them unless I have to. Unless I'm jacking the trade, then I'll do that. For those of you that don't know what jacking the trade is, you'll learn that in the academy. Jacking the trade is a long-term trading approach that you can use to make money without having to watch the position. And if done correctly, even if you're long on the if you're wrong on the trade, you still make money when you unwind the trade. I call it the no lose trade. All right, you're not really allowed to say that, but that's technically what it is. I loathe options because options are losing assets. They're designed to go to zero, or what we call in the business cabinet. Cabinet means zero, worthless. That's what they're designed to do. So that's why I hate them. Yeah, some of my older YouTube videos do cover order entries. That's correct. And some of those are also located in the Learning Academy, along with some new ones that I've re-recorded. I'm in the process of doing a lot of stuff like that. And the Learning Academy is, I'm adding new material there constantly, so that you guys can always stay abreast of what's happening. But very good questions. Any other lottery tickets you can give us besides dry ships? Oh yeah, the system is full of them. Right now we cover just shy of 1,000 securities, and these are securities from all over, Australia, Canada, China, you name it. We got it in there. Now, this is a security that you want to trade that is in your country, on your exchange. All you got to do is give me the name of the company, the ticker, and what exchange is traded on, and I can add it to the sheet. So it's not a problem. We trade all securities on every exchange in every country. And I put out the post-wave price triggers, like I said, every night. They're up normally around 11 p.m. Eastern Standard Time. If France goes with Le Pen on Sunday, after market close here Friday, will the post waves catch it in time for your sheet Sunday night? All right, that is a very good question. Let me answer that question this way. Believe it or not, the system does not care about the news. Now, while saying that, let me contradict myself by saying that the system doesn't care about the news because everything that can be known and is known is factored into the price already. Therefore, the system already knows where those key areas are, regardless of what comes out in the news. I know that's hard to fathom mentally. It almost sounds contradictory. I know this, but let me point you to a real life example. Okay. Do you guys remember during the last election, and I gave a two-part prediction, and I said that I believe that Hillary was going to win the election, and then I gave the scenario where I thought the stock market was going to act. I said the stock market is going to sell off first, and then it's going to immediately rally. And then I did a live thing during that night, and I said, it doesn't matter who's going to win. Here's what the market is suggesting. And then I documented that. Well, that was a perfect example. Prior to that, the system showed and told where the key price points were, regardless of what was happening in the world. So yes, the system will catch things before they happen, just because of the design of the system. Looking at those key support and resistance areas that you can't necessarily see looking at a chart, believe it or not, because you're looking at intraday price patterns. Yeah, that's a good question. To be quite honest with you, there is nothing sneaky that I have been noticing in the algorithms lately. Things have been quite quiet after the last couple of algorithm shifts that we've had. That is normal. I don't really foresee anything big coming to shock anything because the algo shifts have already occurred. So the warning has already gone out. So now all you have to do is watch the system, watch the price triggers. The price triggers are the alarms. They are the alerts. Regardless of what happens, I don't care what happens. The price triggers will put you on the right side of the market, period. Case in point, hands down. There's no ands, if, or buts about it. Now, like I said, they love doing things on the weekend when the markets are closed. So anything can happen. The only thing I can say is if you feel some type of way, what you can do is just use the price triggers, place your positions before the close on Friday, and let your tickets work. So when the markets reopen Sunday night at 6 p.m. Eastern Standard Time, you'll be there to take advantage of it. See, that's the good news. Anything that happens over the weekend, the U.S. markets open Sunday night at 6 p.m. Eastern Standard Time. So you can trade those futures and forex markets in Bitcoin with no problem. I'm glad. That's a good question. Let me read this question. It says, but how can the pulse waves take into account something such as a declaration of war or a sudden government shutdown? I am so glad you mentioned that. The answer to that is because all of that information is irrelevant. Let me tell you why. The markets move in wave patterns. Those wave patterns give off price points. Those price points are significant in and of themselves. They don't tell you the why, they just tell you the what. So, case in point, let's use an example. Let's say we'll use 9/11. No, the flash crash of May the 10th, 2010. Perfect example. I also documented that on my YouTube channel. You can pull that up. Okay. The day before that situation, I put out the price points. I did not know that a flash crash was coming, but the system pointed out a price point that you could not see on a chart. That price point was significant because it said if prices hit here, sell short immediately. Prices hit there before the flash crash happened, like maybe 20, 30 minutes before the flash crash, and then boom, the flash crash happened. Had you been paying attention and was trading and executing like you're supposed to, you would have, quote unquote, got lucky and caught that. Now, we don't know how and we don't know why those price points come up the way they do. I just know that they're there. And the system sniffs those out and gives them to us so that we can have an opportunity to be ahead of everyone else and profit. So it doesn't matter what the storyline is after the fact. It just matters that we got in. I didn't know about the flash crash. I'm not going to lie and say I knew about the flash crash. I did not. I just knew what the price points were. On 9/11, I was not involved in 9/11. I did not have prior knowledge of 9/11. All I knew is that 2 weeks prior to 9/11, the stock market was giving off an alert. I got a crash alert, and I called up. I was a stockbroker back then. I called up my entire book. I called up all my clients and got all my clients. Yes, I'm about to say something that is anathema today, but back then it was the thing to do. I got all my clients into put options on the S&P and the Dow. The NASDAQ didn't really have a viable options market, so I couldn't do the NASDAQ. It was just the S&P and the Dow. And I loaded up on put options because the system was signaling that a turning point was coming, but it said within the next 18 months. And I had a price point. I didn't know that 9/11 was coming 2 weeks later. All right, these were just options, okay? Next thing I know, 9/11 happens, market goes berserk. You know the rest of the story. I had clients that quadrupled their accounts that day. You know, so I don't know the whys. I don't know the hows. I just know that the markets move in wave patterns and price points that are key. Have you guys that are in here that are not part of the Black Ops trading room, have you ever heard of stop running or, hey, they ran my stop? People talk like that. Well, there's truth to that. That's not made up. There's some truth to that. The algorithms sniff out these key points and they can read other people's positions, and then they run the market toward that to defeat you. Well, I took advantage of that and I flipped it. I run the stops of the banks. I run Goldman Sachs and JP Morgan stops. That's what I do. If you do not believe that, you have to simply come and see it for yourself. But that's real talk. You can't make this stuff up. There are people in the trading room right now. If I'm a liar, someone please point it out. Let the people know the truth. But it is what it is. Let's see. Okay, a guy with a margin account had 30,000, which he shorted. The market moved against him, and he lost all his money. Then owed eTrade 100,000. I want to use margin, but that scares me. Okay, first of all, that scenario that you pointed out, it's very real. You need to understand that. Yes, that is why I say bulls make money, bears make money, and pigs get slaughtered. That right there is what we call a home run. If he used his whole wad and put all his eggs in one basket, that was foolish. Yes, if he was right, he could have made millions. But look at the odds. The odds, that's gambling. He would have been better off playing blackjack in Las Vegas. That's not what we do here. We trade. I never put all my eggs in one basket. On average, I think the most I've ever risked on a trade before, on one trade, one position, was $5,000. That's the most I ever risked on one position. 5K. Meaning that if I was wrong, I was going to lose 5K. However, if I was right, my profit potential was unlimited. All right, so yes. But on average, I risk about, on average, $1,000 per trade on average. I don't risk more than that on a trade. Even with $1 million account. It's just how it is. I just don't do it. There's no reason. You never do that because then you don't have any more ammunition left to move and pivot if something were to happen in the market. All right? You don't have to ever panic and sell and dump a position. You should never be put in that situation, not even in a flash crash. You should never be put in that situation. You should always know how to move, stick and move. All right, next question. Do you have ability to send out alerts of your trades to our phones if we are not in the trading room? No. That's not how we do it. The way we do it is like this. I'll tell you how I got it set up. I have it set up right now so that the first thing you do is you follow me on Twitter. That's number one. You follow me on Twitter. Anything that is mad significant, I always type it in the trading room first, and then I tweet it out. All of the people in the trading room, they have the trading room on their phones. Okay? The software, you can use it on your smartphone. So you're always in the trading room. Okay? That's what everyone does. Even I do it when I have to leave the office and go about. I'm always logged into the trading room. So I can always type what I need to type, say what I need to say, whatever. Even the webinar that we're doing now, I have the app on my phone. So I can be out at Walmart. If something's going down, I can go ahead and I can do a quick webinar real quick. I have done it before. So yes, I can do a webinar anywhere. I can reach out and touch you anywhere. So you download the app to your smartphone, and that's how you do that. All right, let's see. Someone asked, what is my Twitter handle? Let me put it in the room here for you, because I don't know it offhand. Isn't that sad? Let's see. All right, there you go. I think that's it. I think that's how it comes up. Yeah, so that way you're kept abreast of everything I'm doing. Every time I do something in the trading room, like if I upload the updated post wave sheet or something, I always tweet it out. When I'm ready to do a webinar for the trading room, I always say it in the trading room and I tweet it out. That way no one misses me, just in case you're not logged into the room or you're not on your phone or whatever, you don't miss it. So that's how we roll. If nothing else, even just doing a 1 month subscription is worth the tuition, because you get a month to download all the classes in the Learning Academy. You can download them. You can download all the past post-wave price triggers. You have access to me to ask me any question you want throughout the trading day. You know what I'm saying? You have a lot of benefits that way. You can talk to other traders in the trading room. Everyone bounces ideas off each other. And we're all there to help you get up to speed, because at the end of the day, ladies and gentlemen, this is real talk. At the end of the day, nothing matters. It doesn't matter. The only thing that matters is that we make money in these markets. So if you guys are not successful, then I'm not successful. And that's just point blank. And that's just keeping it real. All right? I do this service because I want to help people. I want to help as many people as possible. I realize I cannot help everybody. If you say, Dex, all I have is $100 of risk capital, what can I do? I'm going to say to you, absolutely nothing. All right? I know I can't help everybody, but I can teach you. Even if that's all you have is $100 of risk capital, it still would benefit you to at least buy the study course so that you could learn what the markets are all about. All right? You could learn something. That's what that's for. At least buy the study course. That's under $50. Okay? Buy the study course. All right? But for those of you that can, you need to buy the study course and buy at least a month's subscription to the premium trading service, so you can get the weekly post-wave price triggers, so that you can get access to the Learning Academy, so you can get access to the trading room. You can talk to them. You can hit me up. I'm available. You know what I'm saying? We can talk one-on-one. I give coaching. I do all of that. I even help you with your personal portfolios. Majority of the people in the trading room were all gold and silver bugs. Everyone has gold and silver positions and miners and everything else, or a 401k at your job or whatever. If you have a stock portfolio you want me to take a look at, I will look at it for you. That's what I do. I don't charge a fee for that. All right? I do not charge for that. All right? That comes with your subscription. Your subscription gets you a lot. All right? It gets you a lot for the small price. All right? So it's a lot. I've seen other places out there. I won't say no names, but I've seen other places out there. They charge over $1,000 a month. I'm not kidding. All right, and there's a handful out there that charge $20,000 a month. And All of their customers are other banks and hedge funds and stuff, and that's what they charge. And I will tell you, I'll be the first to tell you, you can ask people in the trading room. Once you subscribe, you can talk to them. They'll tell you the truth. I don't know any of them that can compete with what I do. And that's just real talk. All right, and that's not being arrogant. That's just telling you what it is. I let you guys see for yourself. You know what I'm saying? You feedback. You tell me what you think. You know, I put it out there. I built the stadium, just like the movie says. The angels in the outfield, build it and they will come. Well, I built it. So now it's up to you guys to put it to use and do what you need to do. You know, and that's just how we roll. Now, it's not for everybody. Everybody don't learn at the same rate. Some people say, oh, I'm getting nothing out of this. Okay, that's fine. Like I said, I can't help everybody. I can only help people to say, you know what, Dex, man, I do need to have extra income streams so that I can provide for me and my family. And like I said, this is an easier outlay than any other business I know. All right, and you don't have any overhead, and you don't have any employees. It's just you and the markets. So that's what's up. Any other questions before we cut out of here? Let's see, does the majority of Wall Street know the markets are fake? They have to know by now. They can't be this asleep. It's so obvious, like MSM. Excuse me. That's a very good question. That is a very good question. Yes, this is being recorded. Let me answer that question in a couple of ways. All right. First and foremost, depending on what your role is on Wall Street, because there are, dozens of departments and things, a lot of people are compartmentalized. Most of the people go to an Ivy League school, and then they come in as an analyst or whatever. And I'm here to tell you the straight up truth. I want to say none of them know how to trade. That's not what they do. Remember, Goldman Sachs, J.P. Morgan, Morgan Stanley, all those places, those people are the market. All right? Most of the securities that we trade, especially ETFs, are their ETFs. You know what I'm saying? So they are the market. These Wall Street companies, firms have become the market. So they don't need to trade. All right? They make their money off of creating financial instruments and things like that. So they don't need to trade. So the average person there on Wall Street, they have their master's degree. They have their MBAs in business and economics. That means absolutely diddly squat when it comes to trading. And a lot of them, they get these analyst jobs, and they're paid to parrot certain things because it gives greater revenue to their masters. They do not do what I do. There's only a handful of people that do what I do. Even the trading desks and the traders, the outfits that they used to have when they did have them, what they would do is they would benefit and make money based on manipulation and them being able to do certain things that the average retail person cannot do. All right, now, even though there are control mechanisms in place to prevent certain things, they are the cause of anything you see happen in the market, and you need to understand that. If there's a flash crash or anything like that, they are responsible because they're the only ones that have the ability to push a button and buy 1 billion shares of something where there's only 1 million shares. You and I don't have that capability. On the retail side of things, there are checks and balances and control mechanisms that will not allow you to do something like that, even if you wanted to. So, with that being said, a lot of them, when they leave Goldman Sachs or wherever they're at, whatever vanilla firm they're at, and they start a hedge fund, the reason why a lot of these hedge funds have been closing up shop over the last decade is because a lot of the loopholes in Wall Street have been closed. So a lot of them had to admit they could no longer make money. They could no longer be profitable. So they liquidate, close up shop, and issue redemptions and go and start a new life somewhere. These are all facts. There was a hedge fund guy on YouTube many years ago who had to close up shop because he could no longer use the mechanisms that he was using. Now, he was very well off. He was very rich. And so all he did was move on an island somewhere and chill. And then next thing you know, he stopped making YouTube videos. But yes, so I'm telling you what it is. These are realities. And ain't but a handful of us on YouTube that do what I do. And I can't say a handful. I can only name one other person that does what I do, but our approaches are like night and day, two different people. And that's it. I don't know anyone else I know other people on YouTube that do, technical analysis videos and claim to be traders and all that, or trading companies. But I don't know anyone who has straight up worked on Wall Street where I could go to the NESD's website and type their name in and their jacket number comes up. I don't know. I only know one other person like that besides myself. I did a video some time ago showing you guys how to go on the NFA's website and the CFTC and the SEC site and look up people that claim to have worked on Wall Street, and it will tell you what who and what they were and all that. It doesn't matter how long ago they worked on Wall Street; they do not erase that data. That is public information as far as they are concerned. And a lot of people on YouTube who claim to have worked on Wall Street, I demonstrated how they were liars. You cannot find their name anywhere in the SEC database, the CFTC database, the NFA's database, nowhere. Nowhere. And I'm here to tell you, even the Honorable John Corazon's name is still in the database. And I pulled it up and showed everybody. Everybody's name is still in there. If you worked on the street or had any kind of securities license, you are in that database. Now, if you were some kind of paper pusher or worked in the mail room, you're not in the database. Only people who had securities license, like a Series 7, Series 65, Series 63, Series 3, securities license. Or if you're a principal director, yeah, you're in the database. Everyone else, you're not in the database. It's a lie. A lot of people claim to be traders. They didn't. They were not. They may have worked somewhere, but they were not in a securities thing, which means they were not in a capacity to speak to the public about securities. They could have been an analyst who had a license, but then they would have a license and they would be in the system. And I'm here to tell you straight up that everyone who worked on the street with a securities license, whether they talked to the public or not, all the big firms made you get a securities license if you were dealing in the securities in any fashion. And that's just, and even if you worked in the back office, some firms still made you get one. So it should be able to be verifiable. That's all I'm saying. All right, I missed what you said about dry ships set to launch up. On the dry ships, yeah, it's funny because we talked about this in the trading room too. For the longest time, the system has been, short on the dry ships, and we were just waiting for an opportunity to get long again. Now, some of us went ahead and bought a lottery ticket, bought 100 shares, back when it's like $6 a share, just for the heck of it. It's a $6 stock. I'll buy 100 shares. I want to own some because that's our little lottery ticket. So we bought some, and we've been holding it ever since. But just today, as a matter of fact, today's sheet actually gave a buy signal today in the dry ships. And the funniest thing is the first time we get a buy signal, and I don't know how long, the market decides to gap down on the open. And it's funny because it stayed down. It's down 32 cents right now. If you can see it, it's right here, dry ships, DRYS. We're at 74 cents right now, down 32 cents, opened at 73 cents, rallied to 81, almost 82 cents. Low was 65 cents. And this is what we are. So we didn't get triggered on the long side today at all. But we'll see what tomorrow brings. But it was funny because today was the first buy signal. Everyone in the room was going crazy about that. Like, yeah, you see that? We got an entry point. And then the market decides to gap down. So, see, that's the power of the system. See, I'm sure somebody probably saw even yesterday and said, oh, I'm going to get long. And then today they woke up down on their portfolio because they didn't wait. So anyway, That's what that is. Let's see. Any other questions? You guys are asking some awesome questions today. Anybody? Thank you. I appreciate that. Someone says they love my analogy of J-Nug being like dating a hot chick. So true. Yeah. Very temperamental. Let's see another question. Do you ever trade stoned? Would you say it's a bad idea? Do you mean literally have I ever traded while I was high? Or is stoned an actual stop ticker? If so, what's the ticker? I'll pull it up on the chart real quick. Okay, nah, I don't drink and I don't smoke. And I don't do drugs. I don't pop pills. I'm high on life. Oh man, nah, seriously. You know what though? I wouldn't suggest that, especially not in this line of work, because you need to have all your mental acumen so you can be alert to what you're doing. Do you like Wolf of Wall Street? Wolf of Wall Street was hilarious. Um, it was entertaining, but my favorite Wall Street movies is Wall Street 1 and 2, Boiler Room, and the Nick Leeson story, which was called Rogue Trader. And of course, Trading Places with Eddie Murphy. But there's one more I consider a Wall Street movie too, and that's the one that got me started, and as far as really in a big way, and that was the movie The Jerk with Steve Martin. The end of the movie is what did it for me. If you had to give a ratio of day trades to swing trades, what would the ratio be? I know you don't hold over the weekend, but how often do you hold a stock over the weekday? Okay, actually, I do hold things over the weekend. I say I don't like to. If I have to, I will. Like, for instance, let's say I bought something and it really hasn't moved or I'm down on it. I'm not just going to liquidate it because I'm down. I have to let the market stop me out. So in that regard, I will hold something over the weekend, no problem. But I don't like to initiate a new trade and hold over the weekend. Ratio to day trade to swing trades. First of all, I don't day trade. We don't day trade. When it comes to equities, we hold all equities overnight. We swing trade. We do not day trade. We hold all equities overnight. And like I showed you in an earlier example today, like with the Apple situation, you're forced to do that. You are forced to hold things overnight. You may have to hold things for a couple of weeks at a time just to make that clip because they don't move that much. All right. So what are you gonna do? Let's see. So yeah, I would say 99% of my trades are swing trades. That 1% would equal being stopped out in the same day as I put a trade on at a loss. That's what would make that a day trade if that were to happen. All right. There's ticker symbol POT. That's potash. Pot is potash, not pot as in weed. Pot is potash. POT. See, potash. You guys know what they trade, right? You know what that is, right? That's poop. That's fertilizer. That's funny. Is there a good company for robotics? Depends on what you mean by robotics. Depends on what sector of the world you're talking about. The tech sector is full of it. I would just trade the QQQ if you're interested in tech. It's just going up, 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 no end in sight. What will happen to taxes when everyone is issued a check? That's a good question too. That is a very good question. No one really knows how the world is going to look once that happens. But I do believe it's going to be global and it's going to be very interesting to say the least. Potash is pot grinded down. Do you do much long-term investing or mostly just short-term trading? I would say short-term trading. Long-term investing, as far as equities is concerned, does not exist anymore. Not in the organic sense of the word. Now, there's some caveats to that. For instance, if you're, what's the word I'm looking for here? I'm drawing a blank all of a sudden. Income stocks. If you're buying stocks that pay nice hefty dividends and holding those, then that's the only long-term trading I would do. You feel me? So that's it. The reason why you would want to do that is because you can derive an income, specifically with stocks that don't move that much that pay real good dividends. That's what you want. All right. You don't mind a stock rising in value, but you don't want to see it falling when you're buying dividend stocks, because the whole purpose is you're buying them before the income. All right. You don't want to see price depreciation while you're holding for the income. All right. What is the longest you've held a position? Let me think for a minute. What's the longest I've held a position? I want to say it's the dry ships. It got to be about a month or so. Regarding the strange jobless future, free money, reverse income tax. Good watch, everyone. Oh, I'll peep that. Let me see. All right. Thanks for dropping that link. I'll check that out myself. See what that's about. All right. Any other questions? Like I said, you guys have asked some wonderful questions today. That's what's up. Oh, Milton Friedman. Yeah, I love Milton Friedman. Him and the other dude. What's his name? Can't think of his name right now. What is that guy's name? Hold on. It's going to come to me in a second. Hold on. I know it. Hold on. I know the name. Wait a minute. All right, hold on. I know that I don't like when I can't think of names. I'm gonna find it. Hold on. Nope. Hold on. It's at the tip of my tongue. You know when something's at the tip of your tongue and you just can't think of it? Hold on, I'm about to show you. Hold on. Let's see. Yeah, Milton Friedman is definitely a legend. I really enjoy listening to him. Thomas Sowell, that's his name. Yes. There you go, Thomas Sowell. Thomas Sowell and Milton Friedman are two of my most favorite all-time economists. Yes. I knew I was going. I knew it. That's it. Those are the two guys I like. So Milton Friedman and Thomas Sowell. Yep. They dropped some science, man. They dropped science. Not too many people like them anymore. I would say Ron Paul would be a third. Ron Paul and Peter Schiff would be my third and fourths as far as economists that I like listening to. All right. Any other questions? Let's see. Since I will not be able to be in the trading room for 3 out of 5 days of the week during the trading hours, and I am subscribed to your service, how would I be able to view the trades that you are in and out of? That's a very good question. Okay, here's what you do. What I have is there is what is called an in play tab. The in play tab are the securities that I trade consistently and what I'm watching. So you can rest assured that if there's signals in that, those are the ones I'm taking. Anything more specific, I always post it in the trading room and I tweet it out. So that way you're not missing anything if you're following what I'm doing. And so 3 out of the 5 days is good because I'm going to tell you right now, Mondays and Fridays are the slowest days. Typically, those days can be quite like dead, like nothing happening. Tuesday, Wednesday, Thursday are your 3 days of the week where something's going to be pretty much on and jumping. There are also times where we'll go an entire week and not even get a fill. So you'll place a trade on and it won't get filled at all that week because the market's not ready to run yet. If the market's not ready to rally, then you don't want to buy it. You only want to buy something that's ready to move, or sell something short when it's ready to fall. That's just what we do. So it does not matter. I have people that work full-time jobs. I have nurses. I have surgeons. I have airline pilots. All right, people that are just they don't even have internet service for long periods throughout the day. Doesn't matter. I designed the system so that you can either sit there and trade and watch the markets every day, or trade once. Let me tell you how I initially did it. I initially did it so that when you get the initial sheet, Sunday night before the 6 p.m. market open, you can go ahead and put your tickets in for the week and then walk away. Come back Friday, see how you did. That's pretty much the way I designed it. And yeah, it actually works that way. People tend to get away from that from time to time, but that's how I designed it. I designed it to actually work just like that. Because I know people are busy, they're out and about, and I am not a slave to the desk either. That's why I don't day trade, because when you day trade, you don't get a chance to go use the bathroom. You don't get a chance to go play golf or take your wife out to the movies, because guess what? You're chained to your desk. I'm not chained to my desk. I put my tickets on Sunday and then come back Friday and see what's up. Seriously, I designed this thing, man. 5-10 minutes a day tops is all you need, just to monitor your positions, cancel, replace your stop losses, and that's it. That's all you're doing, man. You don't need to spend a lot of time doing this. This ain't the 1990s where you're day trading and you're a slave to the computer. Those days are long gone, my man. Ain't nobody slaving no more. And that's real talk. All right, anybody else? And I also want to put out here too, you guys, I design everything to cater to the individual. So if there's something you need, if there's some hand holding you need, and you can always hit me up and we could come up with a plan or an idea so that you can, get the most out of everything. And it should be noted to also offer what is called a diamond program. The diamond program is the money management program. So let's just say you just do not have the time to do any of this. Well, that's where I will do the trading on your behalf and we split the profits. It's just that simple. At the end of the year, you issue me a 1099 for my portion of the profits, and that's it. We go about our merry ways. So that is something that is an option on the table for those of you who need that. All right? So throw that out there for you too. And for those of you that want more information on that, just send me an email. We can chat. That's my email address right there. All right. Any other questions? Oh, one more thing I need to note too. It would behoove all of you to not only follow me on Twitter, but also go to the pulsewavetrading.com website and register on the website. That way you can be kept up to date, like when I'm doing special webinars like this or what have you, whether you subscribe to the service or not. All right? That's a good way to follow me and keep in touch with me too. Question, do you give any weight to the Ichimoku chart analysis techniques like cloud breakouts? All right. For those of you that don't know, I call it Ichi for short. The Ichimoku chart analysis created by the business Japanese men going back to like the late 1940s, what have you. I think it's a wonderful, wonderful technical analysis technique to give you an idea of what the markets look like. For those of you who are not in the know, and for those of you who are, obviously this Kumo cloud is where I get that from. All right. The Kumo cloud is not something that I created. The Kumo cloud comes from the Ichimoku chart analysis techniques. However, I do not use the Ichi like everyone else uses the Ichi. I use the cloud part of the Ichi for my YouTube videos. Everything you see in this YouTube video is for your purposes, so that you can have a visual of what I am saying. This is not the pulse wave price triggers, because people have asked me that before. This is not the system. This is not the trading system. Has nothing to do with it whatsoever. And like I said, as far as charting techniques, I think the Ichimoku chart analysis is the best chart analysis techniques on the market. Unlike other free technical analysis tools that come with most charting programs and most brokerages, I think the Ichimoku is the best, in my opinion. However, there's aspects or weaknesses of the Ichimoku system that you need to understand. And just like every other technical indicator on the planet, I do not give them any merit whatsoever. All right, they're there for your purpose, not for any other purpose. And people have tried to build systems with those things and have failed. I can tell you, I've had clients back when I was on Wall Street, man, that used everything from voodoo to astrology to trade the markets. And you may laugh, but there's one guy in particular that comes to mind. He had this most elaborate analysis for trading. It was the most insane thing I've ever seen with my eyes. And you know what? It worked for him. So whatever works, there are more than one ways to skin the cat, so to speak. Whatever works for you, then God bless you. However, after working many years on the street and knowing what works and seeing what doesn't and building systems, designing systems, that's what I got paid to do. I know what works and what doesn't. And I can tell you that what used to work back in the 90s does not work anymore today. The only thing that works is trend following, but even in that, it has now been controlled by algorithms. Therefore, like I said, unless you have an algorithm that's superior to what the Wall Street firms are using right now, you're not going to make it. You can't trade the way you used to. Also, take a look at this crude oil trade here. As you can see, the market is slowly moving into my favor now. It's coming off here and pulling away. This is a daily chart. See it pulling away, trading back toward the lows of the session. And you probably won't get a chance to see this today. So it'll probably be, you'll probably just make note of it and you can take a look at it over the next day or two. This leg here should be setting up for the next leg down. It should crash through the lows of this bar here with no problem. And I see us getting deeper into that 46 level. We should be in the 46 handle, if not tonight, but possibly sometime tomorrow. And you can see it's starting to set up here. It's losing that momentum now. Had a nice 4-bar run, and now it's starting to pull back. The first sign of weakness will be a takeout of 47.65. The acceleration point is at 47.57.5. If you guys want to write that down or take a note of that and follow it tonight into tomorrow, you can see what's what. All right. Also, I don't know if you saw it or not. Let me pull it up here. I'll tell you where my stop is because that's key to know. You got to know where the stop is. The stop here is at 48.10. All right. So we are short at 47.80, I believe. Let me just double check. I want to be accurate here. Let's see. 47.80. Yep. All right. So we're short at 47.80, and this and stop loss is at 48.10. All right. If you want to make a note of that. All right. The initial support is at 47.65. So I'll write that down. And our acceleration point, meaning that this is where we fall out of bed, is at 47.57.5. All right. So your first alarm goes off if we breach 47.65. Your red alert goes off at 47.57.5, meaning that if that happens, we are going to put in a new leg down, which would last us maybe, at least 1 or 2 bars, okay? So that's the trading plan of today's futures trading, futures tutorial. This is a live trading situation done live, so you can get an idea to see how these markets work, see what you're up against, see how the algorithms are moving and ebbing and flowing. You can also note here too, guys, that while we've been doing this webinar, this FOMC Day webinar, that gold futures is falling out of bed, accelerating to the downside now. The banks are coming in and attacking this. All right, we're losing momentum on the weekly. We're right here. We're breaching badly. We just broke support on the daily. Now we're in jeopardy of breaking support here. And you see my cursor? All right, a close below this support of 1239.10 puts us in free fall. Then we will be gunning toward 1213, which is then the next support. A break below that, and we're like in free fall going to 1150 on this gold. Okay. All right, and once again, you can see the price pattern, like I showed you. This blue momentum line is extremely important because every time price gets to here, it accelerates and puts in a new leg down. And that's what I was showing you in today's webinar. And that's what you're seeing play out. You can't make this stuff up. All right. If I was a liar, then this wouldn't be happening. You wouldn't be seeing this. See, I don't like to talk about things I can't demonstrate and prove. So that's what this is about. All right. I'm showing you guys real time what's what. All right. Any questions about what you have seen or what you are currently seeing or what you have heard? Anybody else before we go ahead and close up shop here, because the 4 o'clock bell has hit. Where the market is closed. Equities are closed. Anybody got questions for me? Last minute stuff. And we pull back up this oil. So you can see our real-time trading, how it's panning out. And we're getting closer to taking out those supports, you guys. All right, we just took it out. There it is, 47.57. We're accelerating in the crude oil. Market is falling, selling off, making us money because we are short. Here we go. What did I put here? Our initial price objective is the 47.30 low. However, we should take that out now because our first 47.65 initial support has been taken out. And we've also taken out the 47.57 half. That's where we are right now. That was the low of this bar. This is a 1 hour bar. And our low has corresponded to the number that I gave you precisely. And we just retreated from it. 47.57 half. You can't make this stuff up, people. What are the numbers I gave you? What did I say? What did I type before it happened? I told you where the acceleration points were. I told you where the supports were. What have you seen? We took out that initial support, but not the acceleration point, because the market knows that if this 47.57.5 takes out, we are in free fall, and that 47.30 is going to be bye-bye. We're going into the 46 handle. All right, we go to 46. All right, someone asks, how low do I think this will go? Let me show you. It's going to be the bottom of the trading range I've been showing you in the YouTube videos. Let me show you where that currently is. All right, currently, that's the initial one is going to be the bottom of the Kumo cloud. So it's going to be around the 46.45, 46.50 level. So that's where we're headed. We're gonna drop about $1 initially, I think. That'd be the initial knee-jerk reaction, about $1. So I'm gonna say 46.45 equals the initial target or initial profit objective. All right. Live futures trading event. And what have we just done? We just took it out. That is a wrap, folks. It is a wrap. We took out 47.57.5, and the market is falling to 47.52.5. We're falling. Getting worse. Getting worse. This is how you trade, people. This is trading. Trading 101. Any questions? See how these markets work? So, am I a liar? Am I a fraud? You guys tell me. Do I know what I'm talking about? Do I not know what I'm talking about? Any questions? Can't make this kind of stuff up. This is live. This is what we do. This is how we roll. And earnings are coming out. Fitbit is coming out with earnings. It's 60 cents in after hours. Interesting. All right. So if we don't have any more questions, I guess we can end this. If everybody's satisfied, have I answered everybody's questions? No problem, no problem. That's what I'm here for. I try to reach as many people as I can, help as many people as possible. That's all I can do, right? All right, so you guys have seen the initial example of today. The question was, can you make money in these markets? How much money can you make in these markets? Well, here it is right here. You tell me. This is what it is. All right. So far, this trade is up $137.50. That's more than some people get paid working a 8-hour shift at Wendy's or Walmart or what have you. You see it right there. All right. Can't make this stuff up. This is what it is. Show and prove. All right. So you answer your own questions. Can you make money doing this? You sure can. And this is just an example of how you can make that money. Any other questions? It's a small little thing, but it's an example. All right, so with that said, then I'm going to just go ahead and close this out. We'll end the example. Go ahead and take the money and run. Why not? There it is right there. Out of the position. Made the coins. All right, by the time I unwinded it, it's $125. I'll take that. Just an example, but I'll take the money. You will never, ever go broke taking profits, ladies and gentlemen. This is how we roll. All right? One webinar, one example, in profit. There you go. So there should be no questions anymore if this is real, if I really make money doing this, if I know what I'm talking about, or any of that stuff. We just pulled a rabbit out of a hat. We did it off the dome, freestyle, not rehearsed, not written. You can't make this up. I didn't know what the markets were at. I didn't know where we was at. Did you? You know, I said, I felt spontaneous. I said, let's do a webinar today, which we always do. We always do FOMC Day webinars. But I said, let's invite the public. Let's invite the YouTube public. This will give them a chance to come and see what we do and how we do it. And they can ask questions and hit me up one-on-one. So that's why I did this, so you guys could see it, so we could, you know, do what we do. Oh, well, thank you. I appreciate that. I just want to encourage everybody, you know what I'm saying? Whether y'all come on aboard or not, let me just take this opportunity to encourage every last one of you. Understand that, you know, this is just what I do. Other people have a thing that they do. This is the easiest thing that I have seen. It's the hardest thing you're going to do in your life. Don't get it twisted. But in my opinion, it's the easiest method that I have seen to build wealth, more than real estate, more than any other business. Now, I'm sure if some of you are real estate gurus and you make millions in real estate, you will argue that against me. And that's cool. I'm just saying this is the easiest thing that I have seen, the best way that I have seen to start a business with minimum amount of money to do it, as compared to opening some franchises. A franchise with McDonald's is going to run you like $1,000,000. All right, you don't need $1,000,000 to do this. You see what I'm saying? So I just want to encourage all of you with that. All right, well, with that said, we'll go ahead and we will wrap this up. I will plan to do more of these and open it up to the general public. But I just wanted to encourage you guys for now, and thank you all for attending. Thank you guys, the ones that follow me on YouTube and support the work. Please remember to rate the videos that I put out on YouTube, and you know that'll help other people to see them. You know, tell a friend, all that good stuff. And I'm constantly trying to improve things and add new things so that I can help more people. Because at the end of the day, it doesn't matter how great you are; it matters how great you make people around you. And that's all I'm trying to do. All right, so with that said, man, peace out. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And for those of you that don't know, that saying is regarding the markets. Take what you can from these markets and give nothing back, i.e., don't get stopped out at a loss and give back all your profits. That's what the saying means, so that no one gets it twisted. I wasn't saying take everything you can from this world and give nothing back to it. Oh, that's not what it means at all. All right, so thank you all for attending. Be encouraged, and don't forget to follow me on Twitter, and don't forget to register with the website so you can be kept abreast of events and things as they come. All right, peace.